If you freelance on Fiverr or Upwork, there's a major tax change for 2026 that you need to know about. The IRS just raised the 1099 reporting threshold from $600 to $2,000. But before you celebrate, this doesn't mean you owe less in taxes. It just means the paperwork changed. In this video, I'm breaking down exactly how freelancer platform taxes work in 2026, what forms you'll get, and the deductions that can save you serious money. Let's get into it. First, let's talk about your tax status. Whether you do graphic design on Fiverr, web development on Upwork, writing, virtual assistants, or any other service, you're an independent contractor. You're not an employee of these platforms. They don't withhold any taxes from your payments. That responsibility falls entirely on you. Now, here's the big 2026 change. The One Big Beautiful Bill Act, signed in July 2025, raised the 1099 NEC reporting threshold from $600 to $2,000 starting in 2026. This means Fiverr only needs to send you a 1099 NEC if you earned $2,000 or more. Upwork works a little differently. They issue a 1099K instead of a 1099 NEC because they act as a payment processor. The 1099K threshold reverted to $20,000 and 200 transactions under the same law. Here's the critical point. Even if you don't receive any 1099 form, you are still legally required to report all your freelance income. The IRS expects you to report every dollar you earn, regardless of whether you get a form. The $400 rule applies. If your net self-employment income is $400 or more, you must file. So what taxes do you actually owe? As a self-employed freelancer, you're responsible for two main taxes. Self-employment tax is 15.3% of your net earnings. That covers Social Security at 12.4% and Medicare at 2.9%. When you work a regular job, your employer pays half. As a freelancer on these platforms, you pay the full amount. Then there's federal income tax based on your total income and bracket, plus state income tax if your state has one. Here's your rule of thumb. Set aside 25 to 30% of your net freelance income for taxes. If you earn $1,000 on a Fiverr gig, put $250 to $300 into a separate savings account for taxes immediately. Don't touch it. If you expect to owe more than $1,000 in taxes for the year, you need to make quarterly estimated payments. For 2026, those deadlines are April 15th, June 15th, September 15th, and January 15th of 2027. Missing these means penalties and interest. Now let's talk about something important for platform freelancers. There's a difference between what the platform shows as your earnings and what you actually owe taxes on. Your 1099 may show your gross earnings, but you only pay taxes on your net profit. That's your gross income minus platform fees and all your business expenses. This distinction can save you thousands. For example, if you earned $30,000 on Upwork, but Upwork took $3,000 in service fees, your actual income for tax purposes starts at $27,000, not $30,000. And then you subtract all your other business deductions on top of that. Let's go through the deductions that online freelancers can claim. First, platform fees. Fiverr takes 20% of every order. Upwork charges 10% on the first $500 with each client, then the rate decreases. These fees are 100% deductible business expenses. For a freelancer earning $30,000 on Fiverr, that's $6,000 in fees alone that you can deduct. Second is your home office. If you have a dedicated space in your home used exclusively for freelance work, you can claim the home office deduction. The simplified method lets you deduct $5 per square foot, up to 300 square feet. That's up to $2,500 per year. Or you can use the actual expense method and deduct the percentage of your home used for business. Third is your computer and equipment. Your laptop, monitor, keyboard, mouse, webcam, microphone, headset, and any other equipment you use for freelance work is deductible. Items under $20,500 can be deducted immediately. Larger purchases may need to be depreciated over time. Fourth is software and subscriptions. This is a big one for online freelancers. Adobe Creative Suite, Microsoft Office, project management tools, cloud storage, website hosting, design tools like Canva or Figma, development tools and IDEs, grammar tools like Grammarly, and any other software you use for client work. All deductible. Fifth is your internet bill. You can deduct the business use percentage of your internet. If you use it 50% for freelance work, deduct 50% of the bill. At $80 per month, that's $480 per year. Sixth is education and professional development. Online courses on Udemy, Skillshare, or Coursera that improve your freelance skills are deductible. Books, certifications, and conference tickets count too. Seventh is marketing and business expenses. If you maintain a portfolio website, run ads, or pay for business cards, these are deductible. Same for professional association memberships. Eighth, if you work from coffee shops or co-working spaces, those costs are deductible as rent expense. And as always, you can deduct half of your self-employment tax on your income tax return. Here's a pro tip for platform freelancers. If you work on multiple platforms like Fiverr, Upwork, and direct clients, you don't need a separate Schedule C for each one. You can combine all your freelance income on a single Schedule C as long as it's the same type of work. Let me walk through a real example. Say you earned $40,000 total across Fiverr and Upwork in 2026. Without any deductions, your self-employment tax would be about $6,120. But let's add up your deductions. Platform fees were $6,000. Your home office deduction is $1,500. Computer and equipment cost $1,200. Software subscriptions total $800. Internet deduction is $480. Education and courses were $300. And other business expenses add up to $200. That's $10,480 in total deductions. Your taxable profit drops from $40,000 to $29,520. Your self-employment tax is now about $4,500 instead of $6,120. That's $1,600 saved in self-employment tax, plus significant income tax savings depending on your bracket. And here's the thing. Platform fees alone saved you over $900 in self-employment tax. Most freelancers forget to deduct these. Don't leave that money on the table. When it's time to file, you'll need Schedule C to report your freelance income and deduct business expenses, Schedule SE to calculate your self-employment tax, and Form 1040, your main individual tax return. One important note, keep your personal and business finances separate. Open a separate bank account for your freelance income. This makes tracking expenses dramatically easier and protects you if the IRS ever asks for documentation. Here's your action plan. Track all your income across platforms, even amounts under $2,000 that won't generate a 1099. Save every receipt for business purchases. Set aside 25 to 30% of each payment for taxes. Make quarterly estimated payments to avoid penalties. And consider using accounting software like Wave or QuickBooks Self-Employed to stay organized. Note, this information applies to US-based freelancers. Tax laws vary by country, so international freelancers should consult local tax authorities. If you found this helpful, subscribe for more freelancer tax tips. I cover taxes for all types of gig workers and freelancers. Drop a comment if you have questions about your specific platform, and I'll see you in the next one.